Good day or good evening, everyone, depending where you are around the globe. That show is recorded for one single reason, because I've received quite a lot of emails of people living at the opposite side of the globe and not really being able to handle this time schedule to see those videos. So we're going to record them, and they will be published each and every week in the educational content channel only inside the Discord. So you won't have notifications inside YouTube, but you'll have those videos pinned every week inside that channels. Okay, so I will keep the video for 1 week and then delete it the next week to upload the newest video. Simple as that. Okay, we're not going to keep long time recordings of those videos. It's only for replay purposes and for people who cannot be there to be in live with us tonight or today. Anyway, now let's get it started. Tonight we're going to talk quickly about the Bitcoin, but there's not really much to talk about, at least not more to say than what I've been saying today in the TradingView update. So we're going to rapidly cover up this thing, because we might have a big candle close today, which means that it is totally impossible to say at the moment. We need to find taking profit patterns, so we'll see about that and talk about that. We'll try to cover up the US equities and some specific assets I might be taking consideration to get into the portfolio, which are Netflix and Boeing, and these are the ones we'll be using tonight as educational examples of technical analysis. So, all right. Let's go. Starting with the Bitcoin. So on the daily chart, what we have is a very nice big blue bullish candle. So nothing to be sold in here. The bulls are even breaking the uptrend channel. That means that the trend is accelerating instead of reducing the momentum like I would have liked to see. So the bulls are really in control. The momentum is overbought for quite some time, which means that when the momentum is overbought, it can heavily reverse or stay into overbought pattern, and which means the market's just going up, 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 and chasing any stops of those who are heading in the opposite direction. Which means that if you're selling, really giving a stop loss is the best option right now, and not being against that market until it validates a reversal. So it could go parabolic, and against that risk, you don't want to be a seller. It really is simple as that. Otherwise, you have very low leverage position, because if your stop loss cannot hold $10,250, really you're into big troubles, because that market could very well go nasty in the next following days. We're searching for sellers, and for now we don't see any of those, which means we will search for taking profits. Instead, means that the bulls are in control, and that the trend will only stop when the bulls will decide to take their profits. And you really don't know where they will do it until they have done it. So it's really hard to be anticipating the market currently, despite just getting out if you were a bear, unless you have a very, very tiny position entry, which gives you the ability to put a stop loss up there, which is, I think, the unreachable area for the Bitcoin. I think the Bitcoin has no chances to go up there while pull backing that previous level, which means that we can go there, but normally we shouldn't be able to make candle closes below beyond those prices right there. Because I think this is the area the bears are still in control into. So I think we could very well reverse. It could be tomorrow, but with that candle, you cannot forecast anything like that. So we need to have candle reversal eventually. So if tomorrow we're making to make an aggressive bearish reversal, and once again we've done that in the past, remember this, really nice candle, impossible to sell, therefore the market reversed the day right after. We could have it, but once again, if you speculate on this, you're trading against a bullish trend, and this is hard to do this. And once again, speculating can only be done with signals, and we'll see that in the H2 time frame, we have nothing like that. When we recorded the session with the French guys, we actually had quite a taking profit signaling in here when the candle closed were right there. Breaking the bottom of the previous candle, we had a potential taking profit pattern triggering. But as you can see, the candle close went on the opposite, which makes really important in here to wait for the candle to close to make sure the signal is valid. Because if we went all the way down short with that potential taking profit pattern, we'll be in deep troubles right now. So we need to have that pattern terminating. We need to have that cycle terminating. And this is why sine wave is there. And watching the price, sine wave is not just looking at the sine wave oscillator, it's looking at how the price is behaving. And it's so potential reversal right there. It sees nothing like that at the current time, so it is waiting to have a confirmation somehow to put the reversal and put the taking profit pattern. When we will have that taking profit pattern, once again, it is not an aggressive reversal pattern. It means that the price could still go higher, but we will have sine wave confirming a potential bearish entry signal, which means that if we do have momentum confirmation coming in the same time, I'll be able to put a new speculative entry with a much better risk-reward ratio, because at that time the invalidation needs to be set right there. So if you handle the risk management with a stop loss up there, means that if you're selling right there, you have a 7% stop loss invalidation, which means very interesting risk-reward ratio, because once again on the Bitcoin I will never risk more than 2 to 3% capital on a speculative trade, which means that in here I'll be able to eventually take a 0.33 a leverage divided by 3, leverage 1 divided by 3, a third of a standard leverage, which is really nice, because if the price is going down, once again we're on a trading scenario, so we're going to take the worst possible case in which the Bitcoin will make a new lower low, okay, but once again, as this is speculative, what I would like to have basically is a price reversing, taking that reversal with a bearish entry and paying for my stop loss with a 1-to-1 risk-reward ratio. Okay, so let's forecast that the taking profit pattern is happening, let's say, during the night. And I wake up tomorrow with a taking profit pattern confirmed by the momentum. I will sell that market. So let's say, I'm going to take a quick example in here of money management according to the strategy. So once again, taking risks, but with a managed strategy who limit the risks and give lots of room for a potential to gain and gain more than the loss you could take on that scenario. Okay?
Well, as a question, what kind of momentum confirmation could be valid for this trade?
Well, momentum is giving a lot of confirmations. Can be any kind of the signals that momentum could give you, which are actually this. We could have overbought pattern on momentum. We could have a taking profit. We could have an exit. We could have a divergent pattern. We could have a bear pattern. We could have an oscillator cross confirmation pattern. Any of those patterns will be valid to me. Okay, so basically momentum is giving you the signal. Remember, you have bull okay or bear okay labels put it right there on momentum, and whenever you have this, it basically means that the momentum is confirming any kind of signal you could have on sine wave. So if somehow we have that case which we had back then, which was a double signal, momentum was confirming the red triangle. At that point we had a double bearish signal. This is what I want to see right now, and that one, if we have it, will have much better risk reward ratio than the one we had back then. And now I'm going to ask you a question. Why is the risk reward ratio much better in here than it was in there? Because it's not really about the risk. The risk is basically the same. When I was trading that area, my stop loss was put it right there. That's the stop loss I've been giving to the market today. I lost that stop loss because the market proven me wrong. Okay, it took away my stop loss. I was wrong on that short entry scenario, and I had to give my stop loss. And simply the market didn't give me a single opportunity to get out. It gave me one right there, and once again I made a mistake up there, down there, and I had to make a sine wave update because of this, because sine wave should have given me that bullish cycle. And if it did, if I had that signal, I would have limited my risk on the short entries and take a much lower loss than the one I had today. Okay, so once again, what led me to that loss is accumulation of tiny mistakes that led me to a loss. I haven't made a strategy application error. I simply made tiny mistakes that one by the other ended up to that loss. And once again, this will always happen, because you always make tiny mistakes, and sometimes they will line up one to each other and lead to a loss. And you have to take those losses. They're part of the game. I'm really not changing my strategy for a bit. In here, I'm ready to sell again. I'm just waiting to have a new respect of the strategy kind of signal in which I'll be trading. And then I'll get to the sell and click once again with a tight money management, clean signal out of a technical framework inside, once again, a context. To me, the daily context is still bearish, and I maintain this. The daily resistances are really higher pricing than what we're currently trading. This is where the daily resistance is. So to me, the daily context is still bearish, no matter what people are saying. No matter how aggressive the momentum is, on the daily chart, we have a divergent momentum pattern, which is totally valid. Okay, we made higher high on the momentum. Look at the prices. We're way below the previous resistance, which means if we fail in here at any time and break down support, we could restore the bearish trend and make lower low. And this is what I am trading. Now, answering the previous question, why do I have a much better risk-reward ratio in here than I had in here? It's not the risk. The risk is exactly the same. Selling back there with a stop up there is giving me the exact same risk management than selling in here with a stop loss up there. But what has changed instead is the reward. Because remember, it's in risk-reward ratio. Reward also has its importance, which means that if we head to the same targets, which is to me nearly approximate 5,700 at least, not even considering making lower if we have nasty bearish reversal and lots of stop to take out of the market in there, we'll basically be able to go lower prices than that. But this is where I will reduce my short exposition. So it's basically going to be my taking profit area in here. And see this, selling right here is a stop loss up there, is giving me a much, much better reward than the one I had on that price area. Because for the same stop loss size, in there I could have gained 30% loss, 30% loss on the market cap, and in here I would have, let's say if we have the signal right there, I could have a 40% loss on market cap. Still heading to the same target. I'll have much better reward for the same risk, which means I'll be able to put more leverage, slightly more leverage than what I had in here for that reason. Okay? But really slightly more because the risk is the same level, but I put a little bit more risk in there. Okay?
Do you mind me asking where do you get that 10,150 level from, where you will be putting your stop loss above? Why do you see this as a critical?
Yes, sure. I actually talked about that on today's trading view video, I guess. Yeah, no worries. We're going to do it once again. I'm here to take your questions, not to just feed you blindly. So that's an interesting question. So we're going to get back to this. Why is that price really important? Because as you can see in here, we had a nasty, brutal reversal. This is the point where we fucked up all the bulls, guys, who were hoping for endless moving up pricings. We really fucked them up in here and pushed the price lower afterwards. And remember when I made the analysis back then, the one that got the crazy buzz around me because I compared to 2014 crash. And back then I said one really important thing. I said whenever we break down $10,250, we'll never ever retrace back to that price until we finish the crash. So if we go there, the crash is not only terminated, but at that point we will have a bullish trend restored. And this will be the total invalidation of selling the Bitcoin for me. If the Bitcoin is managing to making any daily close above $10,250, I'm never ever going to sell that again. Ever. I mean, not buying it either, but I will never ever again put the short entry on the Bitcoin because we will be totally out of the daily chart scenario. Okay? Means that if we do this, there is no more crashing pattern, there's no more resistance, and the market could go crazy bullish without me. But it could go crazy bullish, and the fact that that risk will be in the market, I will not be able to trade against that. Okay, If the market goes parabolic, once again, I don't really give a shit not being in this. If the market goes up, it will go up without me. And I don't care not having Bitcoins. Really, I don't. But I'm not buying at that price. To me, $10,000 is not a viable price for a Bitcoin. So if we reach out to this price and break it up, then okay, bulls are really in control. Good for them. Good for those who bought. But I don't care. I'll be trading other assets in which I have an applicable strategy, the one I've been trading for years. It's simple as that. I've been giving my return on investment for years out of that strategy, and I'm not going to change it. If the market is not giving me the precise context, framework, and trading signals I need to have to trade with a limited risks, I simply don't trade. There are too many assets in that globe to trade, and that will give me those 3 steps. Why would I care putting all my attention on something that doesn't fit my scenario? It really is that simple. Bitcoin is not my life, my entire life, and I hope that spending time with me and learning how to get into trading, you'll get that as well. Putting all your attention on the crypto market and just that, and moreover, if you're just trading the Bitcoin and not trading anything else, it really is a mistake, because this is not how you make trading. Trading is really taking advantage of the statistical advantage. And
He has a question about, well, the upside stop will lose you 3% capital. Does risk management also involve stopping out if the rest goes down as the rest of the portfolio gets hit?
I really don't get the question. If the market goes down, it's just good to me. If the market goes down, it reaches to my targets, and then I'll take a gain, which is the goal in here whenever you trade. I just don't get it.
Yeah, it's something about if the rest of the portfolio gets hit, do you...
Oh, okay. It never happens. I never go wrong on all the scenarios in the same times. It can happen. Of course, once again, it happened in the past. This is what I call the black hole, in where all my scenarios are failing in the same time. But once again, I never have more than, let's say, 5 to 10 scenarios ongoing. Okay, and I risk maximum 3% on each scenario. It's the maximum I'm risking. So whenever I have the biggest ever black hole in which all my scenarios are reaching stop losses without giving me a chance to reduce the risk or take partial losses in the meantime. So the worst possible case, I lose in all the scenarios in the same time and take a maximum drawdown. Guess what? I'm losing 30%. You know how much I make on a year? I make 140% return, which means you never ever... if this happens, I'll lose what? 3 weeks trading? 4 weeks trading? Maybe a quarter trading? I don't really care. And that's the worst case scenario. It never happened since I started trading to failing nearly everything. I failed a lot of trading system in the same time in the past, but never the entire thing, okay? And as I said, if this ever happens, all I lose is 30% capital on the worst possible case scenario. And once again, this is what I make in less than 1 or 2 months, which means the biggest ever risk I could have is to lose 2 months of work. And guess what? The 10 other months will really figure it out and fulfill the gap and get me to a potential to a bullish year. I never made a negative month for quite a lot of time. Even though I took huge losses last year, I made bearish return on wicks, but I never made bearish returns on any month for quite a lot of time.
Agathon has another question about how you choose your targets.
Oh, and then this is technical. Okay, once again, this is step 2 of the strategy that is giving me the target. Step 1 and step 2. The context is giving me where I limit the market, where I stop, where I get the maximum target. You know, the price in which I don't want to go further than that. This is there for me to me on the Bitcoin. I don't want to target and get low exposure and get bearish market exposure below 5,000, which means this is a target given by the context, and this is giving me the maximum target. Okay, I don't go below this. At that price, I'm limiting the market, which means this is where I have my my taking profit. At that point, I take my entire profits, and what happens below that price is nothing I'm concerned about. Okay, because this is the limit I have with my technical, my context. To me, the context can hardly go below this because we have a major support there, and the market to me is not really having the potential to go below this. If it has, then good for you, no problem, but I won't be taking profits in that price area because it's way too risky to me, and I'll take my entire profits if this price is reached out to. Okay, so the context is giving me maximum target as well as it's giving me the maximum stop loss. Because once again, in here, this is where you have the last bears in control price area, which means no matter how is your risk management, you can never ever handle a stop loss above that, because this is the limit the framework is giving you. Okay, really simple thing. If you want to have a very large stop loss and a very tight position sizing, so and a very low risk on that position, risk to get the stop loss hit, really, you can't go further than that. Putting a stop loss higher pricings is totally out of context, and really it could be there. The highest close we made, if the price is reaching there, I think you need to take a stop loss. So 11,500 is the price in which the Bitcoin is bullish. Really, really bullish. And as I said, no kind of sales are possible in such market. Okay, and that's the maximum limit that is given by your context scenario. Okay, and then you have the limit you trade that is related to the local time frame and your technical framework. Because if the price is moving too far away from your technical framework, means that you failed your step 2, and at some point you need to trigger the stop loss if this went too far away. This is why I've been taking the stop loss right now. As you can see, we were still in the channel, so I had still some bearish confidence when we were right there. When we broke it up, I have no conviction. I don't know where this market is heading, and I don't care. This is why I triggered the stop loss, no questions asked.
Other question is, will be looking at the euro-yen today and maybe other indices?
Yes, yes, we'll do it. I don't know what time is it because we're going to stick to it. Yes, we are much more advanced or good in timing than we did with the French guys. So we're done with the Bitcoin. We're going to switch to other assets right now, and we're going to study the euro-yen, the euro-GPY, the Netflix, Boeing, and eventually having a look at the SPX. But as you can see, we're still moving upward with the US equities, and be aware that tonight Boeing is giving quarter release, quarter earnings, which means that market can be high volatile. This is the biggest contributor of the Dow Jones. Much bigger than Apple is. Apple is the biggest cap, but Boeing is the most expensive asset in the Dow Jones, which means don't be violent. The Dow Jones could very well be plus 2% tomorrow morning just because of Boeing. Okay? So what happened today is volatile, really dangerous because we broke down very nasty levels, and yet things could get really dirty tomorrow at some point, but it's too dangerous to trade that today. So once again, my strategy for now has been to stay away from the equities and trading throughout two important things: the VIX, the volatility, and specific standard assets, which are really high value inside the indexes, but not the indexes themselves. Okay, so you know I've been shorting Tesla, Apple, Facebook, and Nvidia. Those are still in the portfolio, and they are getting gains today. Okay, so this is, once again, I haven't shorted the indexes, but I have nice gains today because I've been shorting the weakest components of the indexes. I haven't shorted Google for some reasons, and I still stay away from this. So today, big losers, Google is not in the portfolio, but once again, Apple is, and is a big loss. Not the biggest loss, but on a big loss. Facebook is totally validating the short entry we've made 2 days ago. So it really is all the way down now to Facebook. and I'm going to get to reinforcements after the quarter release. So for now, it's still speculative because we have release tomorrow on Facebook. Nvidia is still pending to have confirmation, so I'm not still yet to a bearish reinforcement on this one. But Netflix could enter the portfolio as well as Boeing if the quarter release is somehow disappointing that market. So let's talk about Netflix first, okay? Netflix, in the context I'll be trading, is the fact that we could have a pullback. Okay, so remember, we're going to do, in respect to strategy, once again, start with the step one context. We're going to move to the other time frame, okay, and find out what the context is. So please, guys, in real time, what is that context?
Overall bull market.
What?
We are in an overall uptrend.
Absolutely not. Please, guys, use your keyboards. I want the right answer for most of you guys. Please tell me you got the point in here. What is this?
I think Marcus said a parabolic market.
Yes, totally a parabolic market. But please, I want to see most of you guys putting this into words. This is a bubble market, okay? So whenever you are in a bubble market, you don't trade that as you trade a trend. There will be no reversal, okay? There will be no signal. There will be no much pullbacks. When this thing will reverse, it will be brutal and it will go from bullish to bearish. So really be cautious on this asset. If it reverses right now, this will be nasty. And you want to be in this because it will going to give you nice rewards. If it fails, it will brutally reverse and get everyone out. Okay? The thing is that, remember what I've been telling you about those markets. When does a bubble explode? When two times. When you see the volume is picking up and the market is failing, making new highs. What did we had? Volume is picking up, market failing to make new highs. We have an absolute potential bubble burst scenario triggering on Netflix, on the context. So what are we trading right now? What is the context?
Local overall uptrend followed by possible crash pattern?
Yes, we will trade a potential crash pattern triggering on the step one of the crash pattern, which means what we're looking for is a brutal bearish reversal stop triggering market in which we will trigger the stop loss below the supports. So you need to highlight the supports, and you know the price will go below those supports to take away the stop losses. So we have this support, this one obviously going to be broken down, I think this one as well, and there we have the bullish gap. And I think this is where we could find the first potential support. Because remember, the breakout pattern is a supporting area. So I think the first viable support we have in here, once again, simply applying the strategy. So we're going to limit the market. Okay, find the context limits. We don't target below those prices. Okay, so respecting and the strategy, we're just taking care of step one. This is where we put the maximum target. This is where we will limit the market and place the maximum taking profit. Okay, we will put long limit entries in here to exit the short position in here and take our profits. Now what we know is that whenever we have the first step, the first wave of a crashing market, it's fast, brutal, and it reverses in V bottom, which means that that target is absolutely needed to be put in a market order. Okay, if you sell, you need to have the opposite buy order on market at the moment you enter the position in here, and you don't target below $230. $230 is where you take your gains, no questions asked. If the price is going below, you don't care. You just respected step one of the strategy by limiting the scenario to a maximum target. And once again, in here, clear maximum stop loss above the resistance, above the higher high. We reject that price. We're not supposed to go higher pricing than that. So this is where you put your maximum stop loss. And then you have to deal with the money management in between. Okay, so as you can see, it's still interesting to sell today with a nice risk reward of 1 to 3, 1 to 2. If you sell right there, you got 2 gains for 1 to loss. Okay, let's just take this to put this in real numbers. Let's say you shorted right now. Stop loss is there, target is there. Okay, 2.23 risk reward ratio. But in that case, you take no partial profits. You just short and put the gain in here, which means that if the market is not reaching your target, you're gonna probably be chased out, or at least you'll have to wait for quite some time to be taking profit. Give me a second, I need to drink a bit. I'm really sorry for those who will see the replay, because I kind of messed up in here. I have kind of tiny bugs with the screen recorder that from time to time is making, when I put I use the play pause shortcut button on my keyboard, it basically pauses, it put plays and repauses again in the same time, which means that I've been basically talking for 15 minutes out of the record. And we've been putting some really interesting things in there in which we analyze Netflix. I don't really remember the last time we posted that video, but right now we gave an analysis on Netflix and made interesting money management calculation in here. So I'm just going to resume and make a sum up of that information, because it's really the most important thing we talked about today. So we're going to simply do it once again for those who will watch out this on the replay. What we've done in here is simply highlighting and respecting the strategy. So I'm going to do it in a few minutes. We went down here to the daily chart time frame, taking care of step 1 of the strategy, which is finding the context. The context we found out is the fact that that market is in crazy bubble market. We really have the exponential move in here, totally out of nowhere. Yet there is reasons, there are volume supporting the prices, but we see more volume happening right there on the market top, which means that this pattern is probably going to crash. So the context we have right now is a potentially crashing market. That was step 1. Then we went to 2-hour chart time frame, finding the context, finding the technical framework we would be trading out of. We saw that the bullish signal up there, which was a valid double signal, got broken down, which means that we are already in a breakdown market. Okay, so it's possible to short for now on the 2-hour chart time frame, but as we saw, we are already on a potential support with that gap up here. Okay, so I'm really making a fast forward analysis right here, but we saw that this is still a support, and as long as it holds up, we cannot short that support. So there is a potential breakout short entry. If we manage to make candle closes below that price and hold the price below, potentially taking a short entry out of that breakout. But it's still hard to do it for now, because this was a bullish signal, and yet even though this is an aggressive bearish breakout, I think we could have some bullish retracements to get in with nice risk-reward ratio. So according to that risk, we decided to jump into the lower time frame to get more aggressive signal entry with a better risk-reward ratio. Sorry about that. So we switched to the 15-minute time frame chart, the one we were in when I restored the play button, and we highlighted this, which is basically the price we opened on whenever we made the gap up release, and this is the price we decided to take as an invalidation level, and so we decided to place the stop loss invalidation above that resistance. Once again, not on the resistance, because the price can go there and it can fail there. What we want to put it is slightly above. We decided to put the stop loss up there. Okay, and now what we've done after that is highlighting potential retracement targets that we could use for a trading entry. So we're going to take one more as well, because as I said, we could have a very tiny retracement and we could eventually consider that price and this one as well. So I think searching short entries and short signals in the 15-minute time frame, anywhere in there, any kind of signals in there is to be taken for granted to me. At least 23% retracement, that's the minimum we need to have, and then we can see tiny little traded zone in here, tiny one as well in here. This one could be interesting as well, and we're going to use it. Okay, we're going to use those. We're going to make a final analysis. Can someone cut the microphone of the one who's having a buzzy reaction, please? And then, yeah, we're going to use the fixed range. Okay, we take that entire area and we see where the volume pulled out. So we've got one resistance in here, one resistance in here, clearly one resistance in here, and a final one in here. We calculated, sorry rookie, I'm going to do it myself, but I need to terminate. Okay. Anyway, so this is how we found all those resistances. To me, from what I can see, this one is highly probable because this is the one we have the most volume on. Okay, so once again, be really careful. This is where we have the POC. Whenever you do a, so the most true reliable levels are in here. The lowest one and this one. This is the one I have the more confidence in then. We took care of those by calculating how much shares we will sell with a stop loss up there and a 2% loss on the risk. Okay, so the stop loss, if reached out to, cannot cost more than 2% loss. Okay, so this is the risk we are taking on that trade, on that educational example, which is basically what I'll be trading. Let's make this clear. I'll be trading that scenario. So if I have any signal in here, I'll sell the amount of shares you have right there because this is the amount of capital I have. Okay, so I basically took the right example of what I'll be doing and how much shares I would sell depending on how high we will retrace. Okay, so 2% loss, the validation of course will be the breakdown of that support, okay, and we'll take a 2% loss if we reach out to that stop loss. So this is how we ended up right with this, simply calculating that if the entry price is right there, okay, the stop loss is 3% movement of the asset. So 3% loss, and we want to lose 2, which means we've done 2 divided by 3, which is how we get that 0.66 leverage, and then we apply that leverage out of a 50,000 euro account, which makes $40,000 because we used a 1 to 20 conversion on euros to dollar, and divided it by $322 per share, the entry price. It got us 123 shares to be sold if this price is the one that I have the signal on. If we have a lower price, then the loss will be higher. So the money management gives me a lower leverage to get. So lower leverage means far less shares to sell because we as well have a lower price of return. Okay. Now we're going to do the same example in here for that next potential resistance in here. Not really going to take that one actually, but I'm ready to. So this one we're going to cancel, and we're going to make that last and the lower one, and you'll see how the higher the price will move, the better, the more shares I'll be able to sell for the same amount of risk. Okay, so I would like to have deeper retracement, but probably won't have it. Okay, I think really that. Sorry.
Do you layer your buys starting at the first resistance then?
Yes, you can do it as well. And in that case, you'll divide the leverage you calculated in here by 3, and you'll consider making 1/3 of your entry in here, a second third in here, and the last third will be in here. That's a possible thing to do. But to me, I'll simply wait to have a signal and get in. The faster the signal, eventually the lower shares I'll be selling. But anyway, once the trade is entered, I'm out, and that's it. I switch to another asset. Once the trade has been entered, I have a stop loss, I have a validation. I don't care about what will happen in between. If the price goes higher, then too bad. I could have sold more shares. But anyway, I'm in as long as the stop loss is not chased down, and I don't have look at the asset as long as it don't validate the price. When it validates, I lower the stop loss and I take reinforcements. That's how it goes to me. That's how I trade all the time. And I'm not going to change this. What's wrong with you? Okay, so let's make the calculation in here. Entry price, 311 or 12, $312. Stop loss is right here, and it's costing 6.5% loss out of a 2%. So we get back with the calculator, And we make the same calculations. 2 divided by 6.5. Sorry about that. I'm going to drink a bit again. So we have 0.3 leverage out of 50,000 euros. Calculator again. So I'm going to move it, okay? So I'm going to keep it on the charts anyway. You'll see the calculations I'm doing. So $50,000 times 0.3 makes me 15,000 euros to sell. I multiply that by 1 to 1.2, which is the euro-dollar conversion. So it makes $18,000. Sorry, I didn't get the previous level, so we're going to divide by 1.2. So, oh yeah, it was 15. Okay, so $18,000. That would divide by 312. So it's times 1.2 divided by 312, which gives me 75.69. Let's round that up. So 58 shares entry. Okay? So as you can see, it really is sharply decreasing. If I get to the highest price, I'll have twice the amount of shares sold. More than twice. Okay, so the higher we get, the better for me. But once again, if the signal is showing right there, I'll take that price, no questions asked. Applying the strategy, no more, no less. If we simply retrace 23% and I have the signal, even though if the price is going higher later on, the trading strategy is this: context, framework, signal. If I have the signals, no more questions to ask. I hope you guys understand, because this is once again simply respecting the strategy, and this is how you are there to get how my strategy works out. And I just did a very interesting presentation today by simply applying that strategy. I hope you learned a lot of things. We're going to stop on this today. I don't have time to cover up Boeing, but I think we talked about interesting things today, and I hope you learned a lot. I'm going to take a few minutes left to give you guys the opportunity to ask some questions, but we're supposed to make that show for 1 hour long, and we're already above and beyond that duration. So I'm going to take 5-minute questions to terminate today, and then everyone will move on to their lives.
Thank you so much for charting. I would have another question, really quick one.
Yeah.
Yeah. One guy is asking for the euro yen.
Yeah, I'm sorry, but anyway, I do daily videos, and I'll try to cover up the euro yen. Just to let you know before I move to your questions, Marcus. I will do my best. For now, I'm having too heavy amount of work, but I have a friend that I'm going to hire to help me out. He's still not sure if he wants to do it with me or not, because it's really hard, to be a partnership with a friend. It can be difficult, so I don't want to push him too hard. I gave him the offer. I gave him time to think about it, and if it jumps in, I'll have someone to help me out with all the nasty part of taking care of your subscription, sending them emails, pasting the same message 20 times a day. He will take care of this, which means I'll have more time available for you. And if this is the case, I will make more videos for you in English, because I'm doing a lot of efforts for the French users, and now that the user base is increasing in English, I need to step up on you guys and give you more educational content, and I intend to make daily videos, no longer in TradingView, but to get you guys into YouTube as well, and to make what we do for the French users basically a 30 minutes to 1 hour daily video about all the assets. We take care of the Bitcoins and the alternate coins when it's necessary. We take care of the Forex. We take care of the stocks and indexes. We take care of basically anything I have in portfolio or watching to eventually get in the portfolio. So it's basically following my trading day by day. Every entry signals I have, I'll get to you. Every trading zone area I will highlight, I'll get that to you. So this is really trading the most transparent way you could see around the web. I'll be telling you what I'll be doing each and every day in advance. So once again, this is the kind of service that all other traders will make you pay for. And I'll do it for free. So I hope you guys will enjoy this. But once again, I don't want to tease you before this is really going to happen. So it really is upon condition that that friend is accepting the offer I'll give him and is helping me. And moreover, if this thing turns out to work out well, because if somehow we cannot manage to work together for some reason, it can happen. Working with a friend is not going to be easy. If this thing is not working well, then we'll terminate this, and I'll probably don't have time to handle this every day. So you have to know, it really is taking me a lot of time to do this. But today, what takes me the biggest amount of time in a daytime basis is simply taking care of your subscriptions, getting you in, granting access to the indicators, sending the welcome message, answering the questions, scrolling through all the channels I'm speaking to you towards, YouTube, in here answering your questions, watching out the channels to answer users' questions, answering the emails I receive every day. This is what takes me the biggest amount of time. And of course, this is what my friend will take care of in the future, which really is going to release me a lot of time available to give you more educational content. Anyway, sorry, it's just so funny. I just got to show you with a pointer, okay? Okay, so anyway, just moving on to this. I'll take your question right now, Marcus.
Up front, I really appreciate your involvement in the community and what you offer. It's really great, I think. So I want to get to short because I know you have a lot to do. The question is, do you see a correlation between Bitcoin USD and, for example, SPX futures? Because since 6K, they are following themselves pretty closely, and SPX seems to front run Bitcoin by a few days. So now we can see a big hit on SPX. So if this correlation is still valid, we should see drop in Bitcoin as well. Am I grasping on squares?
Sorry, you'll have to do it again, because it's really getting hot in here, which means that my windows are opened and a helicopter just went by, which means I nearly listened to anything you just said in the last 10 minutes.
Okay, long story short, do you see a correlation between Bitcoin USD and...
Okay, this I got it.
SPX.
Okay, so we're going to take care of this. Once again, if you want to answer that questions, I'll give you the answer. But once again, it's not the answer that is important here. It's the way I got to the answer. So the next time you have the same kind of answer, you'll be able to answer it yourself. Because I'm not the kind of guy who wants to simply feed you and answer your questions. What's important in here is the way I use to answer your questions, and this is what you need to learn out of, not just to take the conclusion. It really is important to get the way I reached out to that conclusion. Let's get it. So the question is there a correlation between this and this? The answer is, then take a spread chart. It really is that simple. You take the SPX, you divide it by the BTC, okay? So we're going to take the SPX futures market and the BTC futures market. Now we have to see the correlation. So we're not going to use the 15-minute chart time frame. We're going to use the daily chart as well. Okay, so as I can see, no correlation. Still looks like a range to me. Okay. So maybe we'll switch using not that, but the all-time markets. So we're going to use SPX 500, which is FXCM CFD contracts, and we're going to divide it by BTC USD bitstamp and see if we have, yes, we have bigger story. Okay, so now we have something to trade out of. As you can see, it's a really, really nasty downtrend. Nothing to be like a crash or anything like that. This clearly is a downtrend. Okay, so downtrend move, being on in place for quite a lot of time. And what do you see? Heavy reduced volatility in terms of movements. This correlation might be about to reverse, which indeed is not really what you guys want to see. This means that the money is not necessarily going to flow into the Bitcoin.
That's what I want to hear. Thank you for answering that question. Didn't know you could divide this.
Yes, from what I can see, in terms of spread chart, we could eventually reach out to the end of that trend by the fact that we nearly have no volatility. It's going to equilibrium kind of trading. Out of a nasty, nasty downtrend, we already got the exit pattern. We are having the bearish. Once again, using sine wave in spread charts is really, really dangerous. Okay, because sine wave is really having trouble. In that case, we can see that sine wave is nearly good at finding the cycles anyway. So I think sine wave is reliable in here. But we saw a potential exit signal in here, failing to break up, making a breakdown afterwards, and starting a new bearish cycle. I think that now we found the end. Okay, sine wave needs a minimum of volatility to put the cycles, which means that this is probably the reason why in here you didn't get the bullish cycle in here. But clearly I think there is one, and you can see the momentum is confirming right there with an exit as well. I think this correlation is about to reverse, which means that normally the SPX should go higher but faster than the Bitcoin, if this is what I see in front of me. But once again, if we go on higher time frame, as you can see, this is clearly a downtrend anyway. So we could very well be in some kind of temporary movement, okay, but still being in a downtrend. It really is just the fact that either it is just temporary movement in here that will get us to a new bearish trend inside the overall big bearish move, because if you do this, let's use the logarithmic scaling here, but for quite some interesting purposes. As you can see, either we retrace for quite some time, but the trend still remains to the downside, or we get to a new trend, and really is like that, and at that point we'll be just there, okay? It will be a nice wave 3 to a wave 4 and pushing to a wave 5, which means we could be in a wave 4, making a wave 5, and could still be in the next following month an advantage to the Bitcoin instead of toward the SPX.
Interesting stuff. Thank you for showing that.
Okay, so from what I can see, it really is about that. I really don't know much, but from what I can see, here, for example, you asked me a question before about the logarithmic scale. In here, it really is necessary to have a look at the logarithmic scale. But in here, you have a reason to do it, because we're here to assess how deep the how the movements toward a spread chart. We're not just trading an asset. And once again, if you use the logarithmic scale on an asset, which you guys have been doing with the Bitcoin USD, I think is not the good choice. But using it in here is interesting. As you can see, we really have a very nice and brutal downtrend, which could go to nasty levels, okay? Because we reached out to very low prices, which means that we basically cannot really do anything else than using the logarithmic scale. Because you can see we're nearly reaching 0.1 level, which means that we cannot go negative in here, okay? Which means that we really need to have a zooming in chart in here in order to go to eventually lower levels. So below 0.1, so 0.001 or things like that, already, okay? So in here, the logarithmic scale is really necessary.
Thank you so much.
All right. So we're good to go. Okay. Yeah, of course the downtrend's normal. What the fuck? Sorry, it's just the name of the user. It's let's say WTF, okay? Not just say the nasty word. But yeah, this graph seems normal to me as BTC went from $100 to 20K. Downtrend's normal. Absolutely, it is. But you need to be aware that if the money is flowing out of equities to get into Bitcoin, you need to take in consideration the fact that we should take, if we want to make a true technical analysis out of this spread chart, we need to assess the market cap in there. So multiplying the market cap, yes, it is. Okay, so this is where the important thing here is the fact that the SPX capital market cap is far more monstrous than the Bitcoin cap is. Okay, so it really is comparing two very different things. So really, I wouldn't trade that and use that as a scenario. Just take that as an interesting mindset you can have. That suggests we could have keep on going on that downtrend. But once again, if you just trade out of this, it really is totally stupid. This is nothing you can trade out of.
Oh no, of course not. But
yeah.
I just wanted to know if, in general, these correlations can be traded, or am I just grasping on straws? Yeah.
How can you say that? I just gave you the answer. How can you trade that? No trading out of this. Where is step 1? Where is step 2? And where is step 3? There's nothing like that, so there's no trade to me. Actually, you can trade, because I'm not telling you what you should do or not do. I'm here to tell you what I will do, and this is totally out of any kind of strategy I could take profit from. I think as well that what you picked out there is interesting, but I think in order to do it, you need to dig a lot deeper in this, using the market cap rectification in here, and you'll have a slightly different asset in here. But I don't know if we have. I think we have it at SPX cap. No, probably I think it's possible to have it, but I don't have time for this today. But once again, really interesting question, but really need to be digged a lot deeper than that, and once again, needs somehow to have step 1, 2, and 3 on the assets you want to trade. So if you want to trade Bitcoin, you need to have step 1, 2, 3 checked on this asset before putting the button. If you want to follow my strategy. But you can use this once again as a mindset, as something you trade in the long term, okay? But to trigger the trade anyway, even if you trade long term, you need to have signals on any time frame you really want to trigger the trade on, okay? It really is that simple. Someone else is having a cat in here. Anybody else having a question, always stop in there and talk again tomorrow. All right, so goodbye guys. Thank you for staying, thank you for participating today. I wish you a pleasant day, depending on where you're on the globe. Pleasant nights if, like me, you're heading toward the bed in a few hours. Not the case for me, because if you can see like that, I have quite some questions to answer. Also have a lot of emails to answer as well, so I'm not yet ready going to bed.